This is a podcast from the Business Times.
Hi, I'm Simon Tay. Welcome to my Political Cafe. Here, we explore how politics shapes business, investment, and the future of Asia. At this cafe, we brew thoughts from my column in the Business Times, Politics That Matter, and we take things deeper and further in unhurried conversations. Today, we're talking about Malaysia and the Johor-Singapore Special Economic Zone, also known as JS-SEZ. In my recent column in the Business Times, I explored whether Malaysia's relative political calm could develop into a more lasting stability, especially amid the political pressures building beneath the surface, and what could mean for business and investors, of which the JS-SEZ has come to symbolize both the opportunities and the challenges that lie ahead. Since then, Johor's election on 11 July delivered a decisive mandate for the Barisan Nasional, providing political continuity as the JS-SEZ moves towards implementation. But at the national level, the result is more complicated. BN has a stronger position compared to the national government led by the Pakatan Harapan. The PH's weak showing point to an uneven partnership inside the current unity government. BN-PH cooperation may look stable in Putrajaya and the capital, but remains harder to sustain on the ground, especially among UMNO grassroots, which remain uneasy with the Chinese-led Democratic Action Party, or DAP. And that returns us to the stability question. Does it mean this is the right time for businesses to move decisively? Or should there be a more measured approach to wait until details develop? Joining me today to discuss what businesses are seeing, what investors are weighing, and what it will take for the JS-SEZ to succeed is Mr. Alvin Lee, country CEO of Maybank here in Singapore. Alvin, welcome to the cafe. Let's get the conversation brewing.
Thank you, Simon. Thank you for having me on. Happy to share my views with your listeners.
Well, thanks, Alvin. Let's begin with the political backdrop. In this recent column in the Business Times, I argued that Malaysia appears relatively calmer today than it has been for several years since the 2018 transition. But calm, Alvin, is not the same as consolidation. Malaysia remains, I think, in a deeper transition following the breakdown of the old UMNO-centered political order. For many political observers, these elections show how Malaysia's political landscape is still evolving. BN's victory in Johor, winning 48 out of 56 seats, gives the state greater strength and continuity under Chief Minister On Hafiz Ghazi. But PH's weak performance also suggests that unity government partners are not benefiting equally from state-level contests. More broadly, the result raises a tricky question. Can PH and BN remain partners in Putrajaya while their supporters still see each other as rivals on the ground? So from where you sit, Alvin, talking to businesses and investors every day, how are companies reading Malaysia today? Has this state election result strengthened confidence in Johor?
Thanks, Simon. It is inevitable that businessmen talk about politics, just like people talk about weather. But since 2018, when the long-term ruling party got unseated, there's been 4 ruling parties, 5 prime ministers, and yet the economy of Malaysia continued to do very, very well. If you measure GDP, it's grown from $300 billion US dollars to about 470 billion. FDIs continue to flow into the country. And I think the key point to note is that Malaysian businessmen and investors are very resilient people. They are risk takers. They don't wait for all the stars to be aligned. They're always on the lookout for good value. And I think they've kind of grown used to the fact that the government is not going to be always the same. They are very happy to work with any ruling party as and when they come around. So my view is that despite the election in Johor, even though Johor contributes to about 10% of Malaysia's GDP, it is still only the third largest state in terms of GDP contribution, but it is still nonetheless a very important one. And again, there are differences between what the federal government can do in terms of federal laws as well as what the state government can do. So I think there is a lot of optimism in Malaysia still. Malaysia still, at the end of the day, is very well endowed with good talent, good human resources, a lot of natural resources, and again, a very, very attractive investor destination for not just people around the region, but globally as well.
I think what you're saying makes sense to me in three ways at least. One is a baseline case for Malaysia. That strength of the resources, relative stability, talented workforce, ample land compared to Singapore. These have always been there, and even a modicum, just a little bit of stability can help this flourish. Plus, I think for some time, the ringgit was really underpriced. Things look so cheap, not just in terms of consumer purchases, but hiring talent, and Malaysians are talented. That really helped Malaysia bounce back from the doldrums. I think the second point you make is a very important one. The Johor state election actually is a sign of continuity. After all, the same chief minister will run, and UMNO was born in Johor. UMNO winning in Johor should not be the surprise. So I think those two things are very important. But the third point, are you making a case that it doesn't matter, that Malaysia is a bit like Italy or some other country where governments come and go, but Malaysia risk takers will just keep going?
So I think it will still matter, but the important thing is Malaysia has reasonably strong institutions. It ranks quite high in terms of the ease of doing business. I think the World Bank's Business Ready report ranks Malaysia as a top 30% in terms of ease of doing business, right? So I think it's still a very appealing economy.
That's a great background for looking particularly at the Johor-Singapore Special Economic Zone, or JS-SEZ. Now, this has attracted great interest from both sides of the causeway. And every major initiative eventually reaches the same stage, that basically it's got to move from vision, concept, to really an implementation. Where are we today, Alvin? There is plan for a master concept plan by the end of this year. There have been leaders, prime ministers, CPMs signing off on various causes. What's the next step we should be looking forward to?
I believe the momentum remains quite strong. It is obviously natural that when this was announced in 2024, a lot of interest happened. And in 2025, when the formal agreement was reached between the two countries, within a very short span of 5 months, we have got 3 letters of intents from 3 customers of ours pledging to invest almost 2 billion ringgit in JS-SEZ. And since then, there have been more LOIs signed, and we've kind of booked 6 large transactions, again totaling close to 2 billion ringgit. So despite the fact that some of the initiatives are taking a bit longer to come to fruition, take for example RTS, I think the momentum is still there. I'm still very optimistic about the JS-SEZ and the opportunities that it presents. Likewise, my customers feel the same about JS-SEZ as well.
Without necessarily naming any particular client, would you signal to us one of the projects you think shows that this is gaining momentum?
I think, broadly speaking, the benefit of the JS-SEZ is that the two economies, Johor's and Singapore's, complement each other perfectly. Where Singapore lacks the natural resources and the land and the energy, Johor has plenty of that. And Singapore comes in terms of ability to raise capital and funds, as well as to provide high-value R&D expertise. So I think it's a twinning kind of a concept, a win-win concept. And even without JS-SEZ, Singapore and Johor have been each other's largest investors and trade partners for the longest time. So I do again think that this is an initiative that will benefit both countries and both economies tremendously.
I think I agree that there's a huge fundamental complementarity between Singapore and Johor. But I would distinguish between that and what turbocharging effect could come from a special economic zone. Recently, we read in Singapore, some food manufacturing companies are moving their factories to Malaysia. And it kind of makes natural sense. You need more land, and you will need near enough so supply chains unaffected. Your market still may be mainly Singapore and southern Malaysia. But the second part, I think, is what the SEZ could add to it beyond the sort of natural movement of Singapore companies looking for more land.
I think one is external. If you look at the geoeconomic situation, the China plus one, the trade war between China and US, we'll see a lot of trade flows pivoting to this part of the world. I think internally between the two countries, again, a lot of initiatives to make doing business across the causeway very, very easy. For example, the facilitation center, the tax incentives that will help to hopefully turbocharge investments and setting up of factories. I think all of that would come in very, very handy.
Do you think there are particular sectors that are poised to gain? There has been a lot of talk about digital services, chip manufacturing, data centers.
I think it's all of the above. So Maybank collectively, between Maybank Singapore and Maybank Malaysia, we've seen about 20 billion of financing approved since the start of JS-SEZ in 2024. And this is quite evenly split between large corporates as well as SME. As far as industry split is concerned, quite a lot is going into real estate, followed by manufacturing, wholesale and retail. Data center is again a popular investment theme. And then if you look further afield, it's healthcare and social services as well. So it's quite a slew of industries that the businesses are looking to invest in JS-SEZ.
And you see this ramping up, right? I mean, it was announced maybe 1-2 years ago. And if I give us a 5-year frame, you think it's really speeding up and the volume and the implementation rate will go up, or you think it's tapering off?
I think the momentum is still quite decent. I think with the connectivity, with the one-stop shop, with the fact that for logistic company, if you have to go through only one custom clearing, and when all that is operational, I'm quite sure it will make the whole JS-SEZ connectivity even more meaningful.
I'm very positive about this. I think it's good for both sides. And I'm really heartened that it could be an example for wider ASEAN collaboration, right? It's basically still two countries, but trying to get to one system. It's kind of the opposite of China and Hong Kong. We really can set an example for deeper integration. But there's always some question marks. Some small businesses or mom and pop shops are worried that, especially once the RTS, the train starts running, that people just start shopping there every weekend. I mean, it's already happening for some people, but the volume could go up. Do you think that could happen?
I think in the latest survey by SBF, right, Singapore Business Federation, I think Peng Soon correctly described that there's going to be a net outflow of 1 billion and then a net inflow of 750. So again, this is inevitable. But one of the key bugbears for the Singapore businessman is the cost of doing business here. I think some industries like F&B and retail might suffer a little bit, but Singapore needs a hinterland. We need land to build our factories on. We need access to cheaper labor, uninterrupted utility as well.
I think also it's very important to see that as a macro. Not just investors and big companies gain, consumers in Singapore gain more choice, lower prices. It's kind of anti-inflationary from our point of view. But from Johor's point of view, my think tank and I have been to Johor. I think they do see many opportunities. But the flip side is that things could get more expensive for Johor people who are earning a Malaysian salary. Those who are working in Singapore and living in Johor, they should be okay. But if you're earning a ringgit salary at the current rates and paying Singapore prices, if Johor prices start going up, is that a risk?
I think so. I've kind of asked this question to a few of the ministers as well, and I think it's on their radar. It's inevitable. In fact, there's an added complication, right? If you're a person from Penang, if you come all the way down to Johor to work, you may as well just cross the causeway and earn Singapore dollar salary. So all these are on the radar of the politicians. I think time will tell how this thing play out.
If I think back to where we were in the 1990s, when the Singapore PM at the time, Goh Chok Tong, proposed Singapore-Johor, Singapore-Riau collaboration, I think it's not just a long time. The conditions are much better. I think that Singapore today, by price, has just gone so high, it needs this safety valve. For Johor, it's been doing well, but it does need a little bit more turbocharging, right, to really come up. If we were sitting here again in 5 years' time, what would success look like for the JS-SEZ? Me, I think everyone should start calling it just easy. JS-SEZ, just easy. How is the potential going to look like in 5 years?
Quite obviously, I think the metrics that the both governments set for JS-SEZ, or just easy as you said, for example, building 50 high-value projects in 5 years and 100 in 10 years, creating 20,000 skilled jobs opportunities, industrial expansion across the 11 key sectors. I think those are the obvious metrics that we should measure. But I think ultimately, the success of just easy should really mean making the two people's life better and more affluent.
Today's discussion reminds us that politics matters. It does in this case, help create the conditions for business, new opportunities, things that we tried once and failed can be restarted in new conditions. The real test now is execution. If Singapore and Malaysia can translate the vision of the JS-SEZ into sustained implementation, this can become more than just a successful bilateral initiative. It could really strengthen the economic partnership between the two countries and offer a model for deeper regional integration across the region with ASEAN partners and beyond to international investors. Thanks for stopping by the cafe and joining me and my guest, Alvin Lee from Maybank, Singapore, for a cup of latte. If you enjoyed the conversation, follow the podcast. Join us again next time at Simon Tay's Political Cafe, where ideas are brewed about politics and business. Until then, stay steady to navigate the currents ahead. Thank you for listening.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts.